Good morning, good afternoon, and good evening, everyone. Welcome to the second webinar in our Women's Role Banking, Making Finance for Women Thought Leadership Series. My name is Marina Dimova, and I lead financial industry and network advocacy at Women's Role Banking. Before I dive into today's session, I wanted to share a few key points as we get started. First, we wanted to let you know that this event is being recorded. Second, you'll notice that everyone's microphones are muted and cameras are off. This is intentional to keep the focus on our speakers today. Third, if you have any technical difficulties, please reach out to us on the email you see at the bottom of the slide on the screen, and we'll do our best to assist you. Fourth, and very importantly, we'll be hosting a Q&A near the end of the webinar. To submit questions to the speakers, which you could do throughout the conversation, please use the Q&A function on the bottom of your screen. And finally, we'd like to extend a special thank you to our Making Finance Work for Women leading sponsor, Bill and Melinda Gates Foundation, and our core funders for their ongoing support that enables our strategy. Australia's Department of Foreign Affairs and Trade, the Swedish International Development Cooperation Agency, and Visa Foundation. So the topic we'll focus on today is the last mile, agents paving the road to women's engagement in financial services. To set up the stage for the topic, I wanted to start by introducing where we are right now. As financial services have gone increasingly digital, banking and mobile agents have gained prominence as a key channel for the delivery of financial services. Agents provide point of service where customers can cash in and out of accounts, but also are a channel to accessing a variety of products, from loans to insurance. Agents could also help customers build financial habits, such as regular savings. Increasingly, agents represent the face of financial services, as customers transact, purchase, and use financial products through agents rather than bank branches. Agents have the potential to become even more important as more and more financial products and services are going digital. Agents as a distribution channel started gaining prominence in the context of mobile money agents with the success of M-Pesa in East Africa. Over time, Ghana and Kenya have emerged as the world leaders in mobile money. Organizations such as Bill and Melinda Gates Foundation, BCG, IDEA.org, CGAP have worked on strengthening cash-in and cash-out models as an on-ramp to financial inclusion. Beyond mobile money and cash-in, cash-out transactions, agent banking models have expanded as a key channel for banks to engage with their customers. For example, in India, agent banking has been a critical distribution channel for the government to expand financial inclusion to rural areas and vulnerable populations. And over the past 10 or so years, India has increased strongly the number of banking agents available. Be it full service, fixed point agents, or roaming agents with a handheld device, we see an emerging trend around changing the focus from agents opening accounts and doing transactions to agents becoming the trusted relationship managers who can cross-sell a variety of financial services and ensure long-term customer engagement. There is also a growing evidence on the impact of agent banking on financial inclusion and economic outcomes. An evaluation of M-Pesa in Kenya estimates that access to M-Pesa, facilitated by mobile banking agents, increased per capita consumption and lifted about 2% of Kenyan households out of poverty. The impact, which was more pronounced for female-headed households, resulted in increased financial resilience and savings. We've seen that in our work too. Women's Rural Banking, in partnership with a top-tier public sector bank in India, uncovered that customers prefer agents or the so-called business correspondents to other channels because they find them helpful, trustworthy, and convenient. This is true especially for women customers. We at Women's Rural Banking, across projects in India, Pakistan, and Indonesia, have seen that women prefer to bank with local agents. Why? Well, first, local agents are right in the community and are easy to access. Doing banking close to home saves women money and time. They're also familiar and speak the same language as women customers. Even more, they help with onboarding, thus helping women build trust with financial services. Even more, agents are there to do the necessary hand-holding, especially for first-time users. In effect, they'll help women build financial capability and digital capability skills so women gain confidence in their own abilities to use financial services. They also often offer a variety of financial services and could serve all the needs that women customers have. Across the board, financial services providers are increasingly relying on agents as a critical distribution channel and an effective way to reach and engage customers, and in particular, last mile customers. A few examples to share from Women's Rural Banking global network on how financial services providers are using agents are the BRI Link agents at Bank Rakyat Indonesia, the First Money agents at First Bank Nigeria, the Wakala agents at NMB Bank Tanzania, Cash Express agents at e-wallet Wing in Cambodia, and the Consejero agents and Fintech Aflore, from whom you'll hear later today. The role of agents and agent banking models to drive women's financial inclusion is indisputable. Our expert panel will focus today's discussion on the following three questions. What barriers do women face in using financial services, and how could agents help address these? What agent models work in effectively recruiting, training, and managing agents, especially women agents? And what opportunities should policymakers and financial service providers leverage in order to build on the successes to date and scale the impact of agents as a pathway to women's financial inclusion? With that, I would like to introduce our esteemed moderator, Emilio Hernandez, Senior Financial Sector Specialist at CGAP. His work explores digital financial solutions for last mile clients and the impact financial inclusion has on the lives of low-income populations. Emilio, take it away.
Hello, everybody. It's a pleasure to be here. Thank you for the invitation. I really look forward to this engaging discussion with a highly experienced panelists who are really trying every day on the ground to increase the participation of women in digital financial markets, both as customers, as agents as well. So I'll be the moderator for today, just probing some of the questions to really order and make sure that we get the wealth of experience that we have from our panelists. Today, we have 4 panelists with us. I start with Ajawa Banful, who is principal at the Boston Consulting Group. We also have Ana Barrera, CEO of Aflore, a fintech in Colombia. We have Pallavi Madhok, Director of Advisory Services in India for Women's World Banking. And we have Sashidhar Tumuluri, who is CEO of Sub-K Impact Solutions Ltd, a financial service provider in India. Welcome, all of you. We're delighted to have you here, and we'll go straight into our discussion. So just to frame a little bit what we'll be talking for the rest of about 50 minutes today, we really are talking about how do we deal with the barriers of getting more women to participate as customers of financial services, but also to act as agents, as we know that the gender of the agent has a lot of implications on who agents can serve better, right? There's a lot of evidence that's been gathered over the years about what those barriers are, right? And let me just frame it a little bit to kind of make it easier for us to understand how your different organizations have dealt with these barriers. So if we think about the barriers that women face to become agents, you could look at the journey, the typical, let's say, customer journey that any customer needs to go through to become a DFS user. You start with awareness of the product, you go through a phase of registration and verification, you go through the critical function of cash in, cash out at the agent to facilitate your transactions. And that should lead to continued usage, right? And along this journey, there's very well documented barriers that make women drop off this journey. And this is why we see a persistent gap in the participation of women in digital financial markets. So for example, in the case of awareness, it's been well documented there sometimes is a strong lack of compelling value propositions in the service offering that respond to women needs, right? When it comes to registration and verification, we face the challenge that a lot of that depends a lot on using and owning a mobile phone or KYC requirements, know your customer requirements. And the global figures suggest that, for example, 165 million fewer women own a mobile phone compared to men in lower middle income countries. Women are 20% less likely than men to use mobile internet. And 27% of adult women globally cannot read or write, right? So these are gaps that are limiting the ability of service providers to cater and to onboard women customers. In addition, for example, in low-income countries, 45% of women lack a necessary ID to be able to open and register an account, right? And when it comes to the cash in, cash out at the agent, the distance to the agents is an issue, both for men and women, but it's even more for women because even if men and a woman has the same distance to go through an agent, the safety concerns and the security concerns that women face may be much more stronger, right? So all of those statistics that I mentioned kind of compound that drop off of women, and that's why you see less women participating in customers, which ultimately results in a very preoccupying phenomenon that we see globally of lack of usage of your financial account. Just for example, when it comes to mobile money accounts, we know that over 60% of those accounts are inactive globally, right? But that's just to get women onboarded as customers and be able to benefit from a DFS offer. But when it comes to women participating as agents, we see other types of barriers, right? We know that any agent has some preconditions to act as an agent. For example, they need a minimum level of, literacy skills and entrepreneurship capacities, right? So there are gender social norms that have traditionally prevented women from gaining those skills because they're not exposed to markets. They're not exposed to the type of transactions, financial transactions that people do. There are other considerations, for example, when it comes to the upfront capital that an agent must have to act as an agent, to have a float account and to start serving customers. Women are less likely to have control over that capital at the household level, and whatever capital they have, gets dictated, or somebody else dictates how she should use it, or gets a lot of competition with other household expenses, right? So she's less able to meet those capital requirements. And another example is the time that any agent needs to spend to grow their business as an agent, right? To ensure that more and more customers come, to invest in its service point, and that requires time. And women are well known to have what we call time poverty. They, even if they would like to invest more time to make their agent business grow, they need to invest a lot of time in household responsibilities that no one else in this household will take, like taking care of children, like normal household duties, right? So these are some of the barriers that explain also why less women participate as agents, and why it's more difficult and requires more investment for providers to onboard women as agents. So that's a little bit of an introduction of the type of issues we will be discussing. And I'd like to start by asking our panelists, how is it that their organizations deal with these barriers and confront these barriers? And I'd like to start with Sashi from India. Maybe, Sashi, you can comment how Sub-K has been able to address some of these barriers in the Indian context to onboard more women customers and more women agents.
Thanks, Emilio, and good morning, good evening, good afternoon, from depending on where you're calling from. Thanks for the opportunity. Emilio, I think you've actually laid down the full landscape of opportunity as well as challenges. Coming specifically to India and in Sub-K's context, which should not be very different from any other peer organizations that are working in the space, there are a few things that we try to adopt, given the fact that women constitute 50% of the market opportunity. Even if you look at it from that point of view, it is a lost opportunity if we don't address that requirement, right? And thanks to the Indian context, wherein KYC, you mentioned KYC, right? KYC is no more a big challenge, because with Aadhaar covering almost 90+% of population, women have been covered as much as men. And with the whole concept of business correspondence, where banks are mandated to have a network of agents in almost every village within a 5-kilometer radius at their most. So these two actually addresses two concerns that you mentioned. One, the identity issue, the KYC, and the other one is the distance issue that you talked about. But then still there is a challenge of cultural and other economic, socio-economic issues that are need to be addressed. So what we try and do is, when an agent is onboarded, typically when an agent is onboarded, it is a male agent, because that's what you see in a shop front, which usually is a typical agent that you come across. So one way that we address this challenge, when we think that women agents attract women customers, and that's, I think, proven beyond doubt. So what we do is we created a concept of sub-agent, which is also now an Indian banking system, where banks allow us to deploy an agent as a sub-agent. And we try to make sure that majority of sub-agents are women folks in the family, which means that there is a time share that happens between the counter time that is used on the outlet, and women participate very actively in household enterprises, and these outlets are also mostly household enterprises. So in that context, we were able to onboard, let's say, 30% of our agent network is directly or indirectly manned by women, which also means that when we run the data back in the back end, we notice two interesting observations. One is the ticket sizes, the transaction values of the network where women acts as a front end is lower than an average transaction value, which means a poorer customer is walking into this outlet. It's hard for us to know whether it is a women customer or whether it is a poorer customer in general, but there's no real reason to believe that a poorer customer will walk into a women outlet, a women outlet. But we can always expect that a woman customer will be walking into it, and as you know, economically, women customers are lower in the ladder. The other interesting fact is the number of transactions that are facilitated by women agents are higher than typical average transaction numbers. So these are numbers that we're trying to correlate to argue internally that we should have more women, running those outlets. It's hard for us to know whether the customer are men or women because our banks are not supposed to disclose the data. And there is a regulated business in these privacy concerns. But I think all these things are directing us to go more aggressively in terms of recruiting more women agents directly or as a part of the sub-agent course. And that's something that we consciously do if we are not able to find a woman per se to handle that. So I'll just stop there.
Thank you, Sashi. That is quite fascinating. Thank you for that. And we'll certainly go back to many of the points that you raised today. I'd like to continue with Ana from Colombia. Maybe Ana, how would you say your organization in a very different context and both country and organizational have dealt with some of the challenges that you see of onboarding women agents?
Yeah, Emilian, first I would like to describe what our agent network look like, because maybe it's slightly different than some of the most common ones. Our agents, and we actually call them informal financial advisors, what they actually do is that they recommend the people in their community for loans and for insurance products. So they do basically, they have an app on their phones that helps their network, the people around them, submit a loan application, follow up on the payments, so remind people if they are paying late, on time, etc. And also they can sell insurance products. So it's a slightly different agent network. So with regards to some of the barriers that you are asking, I think that for us, technology has been key to break a lot of those assumptions about an agent network. Because I think that what technology allows you to do is to manage a network as ours very efficiently. So meaning that if we can really lower the costs of acquiring informal advisors and lowering the cost of serving them through technology, then, problems that we typically see in agent networks as, like that they need to keep like very high levels of productivity, etc., become less of a problem. Because, for example, you are acquiring informal advisors so cheaply, and that's exactly what happens, for example, at Aflore, that the cost of acquiring an informal advisor for us is so cheap and effective that an informal advisor is profitable from the very first loan that they give. So they pay for their acquisition cost with the first loan. So that's the way we think around managing our network of informal advisors, in that the network, of course, is very important and very relevant for generating trust within the community, but also that we can, manage and serve that network as efficiently as possible to making the most out of it. So that I would say is from the one of the key components and one of the barriers that you said. Another barrier that you mentioned that it's quite interesting is time poverty. And I think that time poverty, alongside with the other barrier that you mentioned of, like training, it's also extremely important. In the case of Aflore, for instance, the agents are doing so as a complement to their daily activity. So their main source of income is not being part of Aflore. They might be, like the baker or the lady that does catalog sales in her neighborhood, no? And then the issue of time poverty becomes especially relevant. So that's for us why technology also has such a special role. Because what we have designed is an app that makes it very simple for an informal advisor, to get onboarded. Everything from being recruited. So, typically somebody will hear about Aflore online via social media, etc., or recommended by others. They will learn about Aflore. They will download the app. do the whole onboarding process through the app, get trained through the app, and finally being able to start promoting Aflore loans and doing the whole loan application process. So that whole experience is really important to do it well, no? And I think that we learn about it all the time by testing within the platform what is the most efficient way of get people onboarded, how do they respond, etc. I'm not saying that we are doing it perfectly, but like we keep. That's what technology allows you to do. It's like to constantly be in this cycle of iteration and learning to improve, the experience in your app. And so that's also how we dealt with time poverty, basically giving really easy to use tools within the app for, screen clients, knowing who in their network has a profile for getting an Aflore loan and who doesn't have the right profile, so that they don't spend a lot of time in a loan application that at the end of the day is not going to be successful. We give them tools to communicate with their network so that they can share, YouTube videos, WhatsApp images, that in whatever way they communicate with their networks, that they have the tools to communicate easily. That's kind of like how we have solved some of the issues. I think that the last one that you mentioned is kind of like the trust issue, and basically what we're looking for is that, we're not making up the role of informal advisors. That role exists in every community. I mean, at the end of the day, if you go around the neighborhood asking like, who do you usually go for, financial advice, like when you don't know how to get a loan or etc. Or a lot of these people sometimes are organizing informal savings and lending clubs, or they are lending out of their own money, so they exist already. And what we're doing is identifying who they are, and making them part of the Aflore network.
Thank you, Ana. That is quite fascinating. Just to start pointing out that the differences in types of agents, right, that we've just heard between you and Sashi. So there's certainly difference between banking agents and this type of financial facilitator agent that you're talking about, which in itself carries different KYA requirements, which imply different cost structures. But your principles, I think, are valid throughout, right? You always should look for opportunities to reduce costs through technology and improve, trust and time allocation. Thank you very much for that. Moving on to Adjoa. Adjoa, perhaps you can comment a little bit on from the Africa perspective. And in Africa, we see the dominance of mobile money agents relative to banking agents when it comes to catering lower income customers. Perhaps you can contrast a little bit what has mobile money agents brought to deal with the barriers that we've been discussing relative to banking agents, or vice versa.
Thanks, Emilio, and good afternoon, good evening, good morning to everyone on the call as well. Thanks for joining. So I think in very simple terms, there are a couple of levers you would think about to differentiate between mobile money agent and banking agent. I think the first one is more structural or supply-led, thinking around what does the typically regulatory sphere in a specific country allow you to do. One of the things that's unique to a country like Kenya or Ghana is that the mobile money or the financial inclusion charge was primarily telco-led. Versus when you think about countries like India, or you think about countries like Nigeria, where it's being led through the banking system. And so that brings on quite a bit of regulatory constraints that filter down to the agent economics. But if you really think about it, the experience, if you think about it from a customer perspective, the experience is going to be very similar. Because if you think about what Sashi described and you think about what Anna described, fundamentally, the people are going to the agent to do the same thing. It just comes down to now, what are the types of use cases that the various agents are allowed to offer? What are the types of use cases that, because of the nature of the model that's backing them, that they are empowered to offer? But I think fundamentally that lever is, or the difference comes from that the structure, And then what the second difference is what the structure allows you to do in terms of use cases that you offer to the various customers. I think there's also something to do around the proliferation of the two different types of models. So in a lot of countries, at least a lot of countries that are struggling with financial inclusion, it's potentially easier to find a telco mast than it is to find a bank. And so the number of people who can be brought into the net, well, we're not talking about how effective they are, but the number of people who can be brought into the net is quite different. And so it changes the flavor of use cases, et cetera, that you can start to have, and the way in which you can start to deploy these agents in pushing forward your formal financial or informal financial inclusion journey. So I think that those would be some of the major differences that I would flag.
Thank you, Ajwa. So good to contrast those different regulatory requirements, which imply cost structures and different cost structures for banking agents and mobile money agents, and what they can do and where they can be deployed. Maybe to finalize these sections around barriers, I'd like to ask Pallavi. So from Women's World Banking perspective, you've done a lot of work in various countries: Pakistan, Nigeria, India, Indonesia. How would you summarize the experience on how providers that you work with in these countries deal with these barriers or address these barriers?
Thanks a lot, Emilio, and good afternoon, good evening, and hello, everyone. Emilio, across our work in the countries that you mentioned, what we do know is that agents are the preferred banking channel for most of the women we engage with. And specifically when these agents are women, you can imagine that this further strengthens their ability to engage with banking and to engage with access and engage with banking. And we've identified these 3 key reasons why this happens. So I'll take you through some of them. The first one is that women agents are able to overcome social barriers. And in many of the communities we work with, women face challenges in engaging with other men. So a lot of the formal banking, and including agent channel, is dominated by men. For example, when we worked with Jazz Cash in Pakistan, our research clearly showed us that women found transacting with the mostly male banking channel very difficult. And therefore, our design had to look into how would we create a woman-friendly channel. Women agents therefore help in bringing often hesitant first-time women into the banking channel, and because they help overcome a lot of the social barriers. The second one is the mobility barrier, Emilio, that I know you referred to. And in some formats, women agents improve access because they are able to provide services closer to home, which are also women-friendly, sometimes even at the doorstep. I'll give you 2 examples. Our work in Indonesia with midwives, we realized that midwives were a really attractive segment to be agent banking channel because they're already in touch with women in pretty intimate settings, and they're important for these women, and therefore they become trusted influencers. Even closer home to India, BC Sakhis are physically present in villages in India. They have mobile devices and therefore are literally able to go door to door and engage with otherwise unserved customers. So women agents are able to overcome the mobility barriers. And the last one is that women agents are particularly good relationship managers. So, they are patient, they explain products and services, especially more complex banking products and services, and they advise on products, which require a little bit of relationship management skill. I'll give you 2 examples here. I work with BRI in Indonesia, which is a leading public sector bank. And we did research work with ultra micro entrepreneurs. What came through was that the women agents who were dealing with loan applications, loan servicing, loan collections, women customers actually preferred engaging with them more because their methods of collection was softer. They were cautious, they were diligent, but they were also as, if not more productive. And Shashi, pointing to the point that you raised on women actually having more women agents possibly having more transactions. We have evidence from our work in India with Bank of Baroda, where we know that at least the women we were working with, they had 19% more transactions and had 45% higher conversions to the small savings scheme that we had launched. So, and compared to their male counterparts. So for all these 3 reasons, having women agents definitely overcomes a lot of the barriers.
Thank you, Pallavi. So this is a great run through of how your organizations have addressed some of the challenges. Perhaps now we kind of a little bit deeper on a reflection of what makes a good agent. Perhaps we continue with you, Pallavi. Can you describe the agent banking model being used in some of this, in many of the interventions that you just described, and perhaps 2-3 factors within those models that you think are critical for enabling to address those barriers?
Yeah, sure. So in India and Indonesia, what we've seen as the most successful model for public sector banks is the bank inclusive fixed point agent model. And most banks are using this to reach rural and hard to reach geographies. Now, these banks are looking to strengthen the channel for more than financial inclusion. It's not just about financial inclusion. And in the process, they're looking to make it sustainable for all the stakeholders now and future. So one, they're seeking to double the agent network compared to investing in ATMs or branches. And the second thing they're doing is simultaneously, they're enabling agents on new revenue streams. So we know that over the last 2 to 5 years, G2P has been a major revenue stream for a lot of agents. In addition to this, they're looking at additional revenue streams like loan generation or digital banking onboarding, etc. So in summary, what's happening is that this model is becoming larger and more complex, and therefore it's requiring VCs to change their behavior from erstwhile cash in, cash out points to now start operating as mini branches for banks. And this requires a behavior change. And from our experience, I'm just going to talk about 2 critical components that are very important enabling factors for behavior change. The first one is agent training. In our work in Nigeria, Indonesia, India, we've seen that agents do need that little assistance in developing a skill. And the skills I'm referring to are ability to pitch complex products to customers, ability to pitch products to women customers, so gender sensitization. And then, of course, how can I go about increasing my outreach? How can I do marketing initiatives or camps? So these are the skills that they would definitely need some assistance in. And what we've seen is that addressing this skill gap helps motivated agents definitely transform themselves, but even the ones who are not that motivated, it gradually helps bring about a behavior change. So that's the first one. The second one is training alone is not good enough. You need supervision to support training because you have to ensure action in the field. And of course, supervisors help troubleshoot. Agents need to feel supported. They are not dedicated to just banking. They do multiple activities so that they need someone to nudge them, remind them to sell a lot of these products. And at least what we've seen is a nice ratio, a correct ratio of at least 30 agents to 1 supervisor. But it's sometimes not feasible for banks that requires a large resource pool. Therefore, Anna, connecting to your point, technology for supervision and MIS will go a long way to making this viable for banks.
Thank you, Pallavi, for that. Going over to Sashi, Sashi, perhaps you'd like to comment in your experience of. I'd like to probe that you comment a little bit on one of the aspects in particular Pallavi mentioned around the agent being non-dedicated only to financial services. That's the need to diversify the revenue streams. How easy has that been in your model in the Indian context, working with public sector banks? And second, perhaps if you could comment around where do you see the opportunities to make this addressing the barriers more viable, right? More self-sustaining.
Thanks. I think Pallavi said it all. It's quite a massive understanding that she's bringing here. I'll address the specific point that you mentioned on how is it that we're able to bring in more services. So I think the experience that we have is that when we say multiple services, I think it's important to distinguish between multiple financial services versus multiple services. So in our experience, an agent can definitely take on multiple financial services with some training, but it is a bit far-reaching to think that an agent can really do a lot of services just because there is an outlet. Because people tried e-commerce, people tried, all kinds of goods and services. So I think we should be careful in terms of what do you want to load on an agent. So cash in, cash out is a starting point for most of the agents, but then you start adding on other ancillary services, including some product diversification. So what we tried and our banks have encouraged our agents to do is, there are so many activities that a bank customer is supposed to be provided, so many services customers are supposed to be provided, like an updation of a pass, for example, because there is still this concept of passbooks being carried to the bank branch for just updating the transactions, and that takes away a lot of branch, staff's time. Updating a phone number on a bank account, updating Aadhaar number on a bank account, and helping them download an app, which is usually something that people can use for their self-service mode. So there are so many things that are not necessarily transactional in nature, but those are important services where a bank spends a lot of time in helping a customer. Now, these things are being outsourced more actively, where there is a cost saving for a bank and they can transfer a part of their saving to the agent, and agent's revenue get added up, and these are services given to the same customer that is coming to the outlet, right? The customer doing a transaction also wants an updation of a phone number or updation of a passbook. So these are good add-on ancillary services that doesn't require specific sales activity. There's no additional cost involved. Now then the next level comes the sales part, which is the loans and insurance, right? So there also, the easier part is to help bank, have a service point where customers can repay their loans instead of going to a bank and standing in a queue and pay for it. It's also a cash in, cash out service, but it's more specific to loan payments, wherein the commissions can be better because the bank is earning a revenue on that transaction, unlike a typical cash in, cash out where the revenue streams are little challenging. Similarly, a loan lead generation, take a name and number and pass on to a bank. Don't get into the technicalities of loan sales, which becomes challenging for many agents. They're not, geared to do complex financial transactions, but they're okay to have a very simple conversation with a customer and get them onboarded into a new journey, maybe a loan journey, or even very simple social security schemes. Government of India has a very, very large insurance program launched a couple of years ago, wherein almost every customer can buy insurance attached to a bank account. And you don't need to pay, actually, there is an auto debit system. So it's all about taking a consent from a customer, then selling a product. So there are those things, right, which an agent can do without actually making a lot of effort, a lot of a sales pitch, or a lot of training. It can be done through simple training programs, small nudges, but at the same time, there is an income opportunity that can be brought on. So that's something that is being tried quite actively across board, especially in public sector banks, where the crowding of branches is a big challenge, and decluttering branches is the biggest opportunity that can be passed on to the agent. The other point, how do we break barriers broadly? There are large platforms that are created in specific to Indian context. There are large government programs that run what we call self-help group, programs, which are World Bank funded. Every state has a mandate. They're called state rural livelihood programs, where only women is the beneficiary or the customer or the client. Now, these are in millions, tens of millions of women are benefited through these programs. And these are large platforms where easy to reach because the platforms are created. Women leaderships have been created in these platforms. And there is effort that is now being made to make some of these women leaders in these groups to take on the job of banking agents. And those tie-ups are also helping institutions like us to go and approach more women customers and bring them into the banking ecosystem, which was not so much digital earlier. Now we're trying to digitize those transactions as well. That is one platform which is available and welcoming, and there is a lot of push from government as well to include them. The other large platform is microfinance platform, which is a joint liability group platform. And again, there is 100% women beneficiaries. And in India, we talk about almost 60 million, customers being reached through this network again, wherein, every MFI can become a business correspondent of a bank. And a microfinance institution can only give a loan, but they cannot open a savings account on their own. They can open a savings account on behalf of a bank by becoming a business correspondent agent. So we are trying to bring these two also together, because there's a platform that is created for specifically women, but then there is a program that is not necessarily women-centric, which is a business correspondence program. Now synergy is being worked out so that you take advantage of one platform for the benefit of the larger interest of the community. So these are certain ways that you don't have to reinvent the wheel. You rather leverage on the work that is done previously by various entities and agencies. And that's the area where SAFCE and, of course, the overall BC community in India is moving towards. It's not done very well so far, but there is a big opportunity that we're exploring in that direction.
Right. Thank you. Thank you, Sashi. Anna, going over to your context, we're wondering, what, how are you foreseeing the evolution of your informal business advisors, your financial advisors, in terms of how do you keep on thinking about increasing their productivity over time? You've heard notions around diversification, right? Of either diversifying financial services offer or diversifying some non-financial service offers in some other context. Wonder how do you see that evolving for Aflore in Colombia?
Yeah, I think, Emilio, it's also good to start from the question of what motivates, if you're talking about an agent, or in the case of Aflore, an informal advisors, what is really that motivates them to be to be part of a network? Is it purely financial, or are there any other motivational factors? What we actually have learned is that for our informal advisors, it is as important to earn, like what they consider is a good retribution for the work they are doing. But also for them, it's actually really important to be able to help the most people possible. In fact, we have a very interesting index that we call it the altruistic index. And we see, for example, that informal advisors who claim that informal advisors, for example, that are able to serve a person that has had a problem getting an access to a loan before, is 4 times more productive than an informal advisor that joins the network because they just want to help themselves. So that's why we call it the altruistic index, no? Because their productivity is directly related to their expectations on how much people they want to serve. And take note that they are never in that index. They were never talking about like, I want to make more money. No, it's I want to be able to provide access to this and that and that other person that they have never been able to. So actually, then the key to productivity there, and it's something that we're really thinking around, is like, how can you improve their success rate? So how can you really offer them like a product or a suite of products that allows them to serve this demographic? I'll give you an example of a problem we were facing, especially right after the pandemic. After the pandemic, what happened? No, that a lot of people, they had to change their businesses, they had to start a new job. And that meant, for instance, for us, that our the approval rates for our loans was much lower than before the pandemic, no? And for an informal advisor, that's a problem, because they want to help someone, but then they get rejected. They cannot serve that person with the loan. So that's a challenge on our side. And the way that we're solving it is like, so what type of product would we be able to give these people that we're rejecting? So it is okay that we won't be able to give them like a traditional Aflore loan, because our loans are typically big and long, and like somebody that is starting their business from scratch, it would be almost irresponsible to give them a loan with those characteristics. But it's like, so what kind of product would help that person? And then what we said, like for those type of people, for example, what you need is something that we call a credit builder. So, it's a smaller loan that helps them, invest in their business, see how it's working, and, as the business evolves, etc., they can merge it to different products, and that improves the success rate of the informal advisors. So that's the way we're thinking around things. That, like, the main hypothesis is, like, if what really motivates an informal advisors beyond the pure monetary incentive is being able to serve the widest possible number of people within their community, then we have to be able, how can we as a Flores serve that community? What type of products do we need so that the success rate of the informal advisors is higher? That's kind of like the way we're thinking around things. And that doesn't necessarily mean that 100% of the products would be developed by us. In fact, we're quite open to, partnering with other institutions that might be able to serve them better with, specific products and then we have. And at the end of the day, what we have is a channel that, as long as us and the informal advisors get compensated for it, we can make it available for other financial services providers. So that's kind of like our long-term view, no? It's like to think around, at the end of the day, we're building a channel is for the end customer. So what are the type of products that the end customers need? Our products or somebody else's products, so that at the end of the day, we increase the chances of success of our network.
Mm-hmm. Thank you. Thank you. Fascinating, clear. Adjoa, over to you. I mean, we've seen, for example, in the African context, great success stories like Kenya, of course, more recently Ghana. What do you think is driving that success, and what can be replicated in other African countries?
Thanks for the question, Emilio. So I think if you were to think about it from the micro level, so that there's the agent side, and then there's let's call it the back end level, which is the provider side. From the agent side, fundamentally, you have to work on the economics for the agent, because if you want to help people, so to use Anna's example, which I actually found very inspiring, you want to help people, but you can't help people if you're not making any money, right? So working on the agent economics is critical. There are 5 things that we've identified that really make a difference between the agent making money and the agent being unsustainable or unviable. A couple of them include, one, first of all, what's your agent's business model? One of the things that we found is when an agent does 100% mobile money or agent banking, because the startup costs are so much higher, in the region of 13% higher, and their recurring costs are in the region of roughly 30% higher than somebody who is combining this with something else. It could be adjacent, but if you are already starting with that sort of handicap, if you will, that makes it a lot harder for them to stick. Another thing is their location. There's different types of areas. You can be urban, peri-urban. Even within a rural area, there are some places which we call oases, where you have sort of bursts of economic activity. And then there are other places which are more sedate, which we call frontiers. And the economics change within them. So you have to start thinking about how you, in the business model, in the sense of, one, does it make sense to be stationary? Or do you maybe want to start thinking about mobile agents? Or do you want to think about temporary agents, e.g., I appear when there's, as in you find in a number of African countries, when there's a market day, for example. Then you want to think around, when you come down to operations, some of the key costs there are around liquidity management. So at the end of the day, somebody has to, the agents really are a distribution network, right? So they put something into a system and they get something out of the system. And there's 2 ways to help manage your liquidity costs. If one is being close to a bank. If you are close to a bank, it means you shut down shop for much less. You spend much less time and money in transit to go and rebalance your float and your cash. If you, in some places, e.g., I remember actually when I was working in Ghana in telco, there were some operators which actually supported with liquidity management by just doing float runs so that they can help with the viability and just allowing the agents to be more productive. So you have to be able to help them with that. And when you think about the fact that there's different types of areas, the sort of solution you would want to think about could be different between an urban area or a rural area. Maybe you don't have the ability to site everybody close to a bank or some sort of hub. Maybe you want to help agents to site close to organic centers of liquidity, whether those are markets or some other economic points of interest where they can sort of liaise with the community to help rebalance their float in temporal terms. I think the final few things have to do with infrastructure. So a lot of these things, so Anna, I like that you talked about tech a lot. From tech, you need to really think around what works for the various areas that you're in. If you are operating point of sales terminals, which rely on a very strong 3G connection, in a lot of areas where you have a very weak 2G connection, you have a technology, you have a solution and a sort of constraint. And so you want to think about how you can improve that. And these are some of the learnings that we've picked up. I think the final thing is around awareness. And there's two sides to awareness. Awareness is, first of all, explaining to somebody how this can be useful to them. The other side of awareness is giving somebody something that's useful to them. And so the one is education. And I think another is just comes down to use cases. So it's all great if I want to use, I can cash in and cash out, I don't have to go to a bank anymore, it's close to me. But what we've seen has worked is when people are actually solving problems that the community has. So if I'm a farmer and I'm trying to reach my end users, or I need access to working capital, and you bundle this sort of financial service, whether it's mobile money or a banking agent, together with a solution to the problem I have, it improves adoption. Or if I am in an area where I don't have very reliable grid electricity access, and so you're offering me a solar home solution, and the bolt-on is that I can use an agent, whether it's mobile money or a banking agent, to actually pay. So I've taken basically a soft loan, and I can pay this off over time. That's some of what helps with these things. That's what we've identified.
Thank you, Ajawa. So this has been fascinating, and we're over time actually for the discussion. But I just wanted to perhaps end with just one key gap that you think you would call out for policymakers and regulators or the public sector that would that you think is very important for collaboration with the private sector to address the remaining barriers, right? The things that we're still struggling with. So if you could name one aspect that you think public sector can support your organizations with to address barriers, what would that be? I'll give the word to each one of you. Maybe we'll start with you, Sashi.
Well, I think there is a need for specific trainings and sensitization, which is basically broadly covering the literacy aspect. So I think there's a lot that can be done on financial literacy and sensitizing not only private sector, but also the whole value chain, the financial system, to be able to include, go for inclusive banking, which I think.
Thank you. Anna, one.
I think that for me is like for the regulator to really think about fintechs as a key integral part of the whole financial services. No, that we are doing a good and specific job in financial inclusion, and then to bring us as a key player in whenever they think around regulation and all sorts of, I mean, to think about it as an integral component of the ecosystem.
Pallavi?
Yeah, for us, Emilio, it is very clearly mandating more women in the ecosystem. We've been working very closely with Government of India through its BC task force, and we're hoping that more than mandating, they actually ensure that public sector banks incorporate this as part of their policy. So that would be my one. requirement.
And Ajwa?
I would say it'd be convening platforms for the various actors in the market to collaborate and co-create solutions themselves. They would need to be part of that. And I think the key thing they would bring is transparency and support. You would need to help people to innovate and give them a safe space to try that.
Thank you. Very well. Well, with that, we will stop kind of our panel discussion. I'll check in with organizers whether we have time for a couple of questions. I know we've been keeping track of that. Ajit, do you mind?
Hi, everyone.
Sharing some questions.
Yes, Emilio. I have a few questions, quite a few good questions from the audience. So I'll read out the first question. This is from Shikha. It says, did the onboarding of women agents help you bring in more women customers or made more women customers active? So this is an open question for all the panel members. If any of the panel members would like to kind of respond to it, I'll read the question again. Did the onboarding of women agents help you bring in more women customers or made more women customers active?
Who would like to take that on? Maybe a couple of volunteers.
Yeah, I can quickly go in. Definitely, I work with Jazz in Pakistan, where we, help set up the women network along with Unilever. Definitely showed the research showed that women preferred banking with women agents, and it helped them increase their transactions. And we're seeing that. I have anecdotal evidence in India. I don't have the data yet to show that BC Sakhis in India are definitely enabling more women in their communities because they're already part of the SHG movement to get access to a lot of banking services.
Thank you. For the sake of time, perhaps we move to another question, Ajit.
Yeah. So I have one more question. It says, how did the commitment in India to increase the women agents came about? I think this is primarily for Pallavi again. Shashi can also kind of pitch in. Would like to follow a similar process to advocate in the market that I work in. Pallavi, would you like to kind of take this? How did the commitment in India to increase the women agents, came about? I think it is based on your point that you mentioned that that we are working with the committee and.
Yeah. No. So obviously there is. There have been some success stories in India, right? And Shashi was referring to that. And these success stories have clearly brought about early wins in helping engaging more women in the community. And therefore, DFS then set up a task force, and the leading public sector banks were invited to the task force along with the BC, a lot of corporate BCs. So Shashi, would you want to add on to that? And therefore, would you like to add further to this, Shashi?
Yeah, so there is this mandate, or in some sense, guidance given by both the Reserve Bank of India and Department of Financial Services, which is under Ministry of Finance, to engage more women self-help group leaders into the banking system as DC agents, which are now called bank Sakhis. And there are very, very promising results coming out from various states that have taken up this very actively. So that is also encouraged us as BC corporates to go out and engage in large numbers of these women community leaders to act as agents. I think the early signals are very promising, and the opportunity is big to be explored and further deepen the inclusion in this space. Yeah. And
excellent. Excellent. I understand I have just I can place one more question due to paucity of time. So there is a question that says, how do you currently recruit potential women agents? It could be, what are the ways to kind of recruit potential women agents? So any panel members, would like to kind of respond to that. Emilio, you are also included in that, please.
Maybe we can hear from Anna or Ajwa.
We do it digitally. So, and that is related also that, you know, like our tool is also digital. So we want kind of like, or we take preference on women that are naturally that feel more comfortable operating, you know, in a digital environment. So we recruit by advertising in social media, Google Ads, etc., or word of mouth. And basically somebody hears about the Flore typically online, and they download the app, and that's where their journey starts, their onboarding and training, etc.
Ajwa, any quick comments on how to onboard women agents?
I think just it's very similar to what Anna would say. Given that the non-dedicated model where the person is not 100% focused on it, banking is what we believe is the way forward. I think you would focus on those women who have already broken into the community in some way, whether they're whatever service they're offering. And then the thing that we found was made a difference in success rates was sort of the caution in onboarding. Players who take their time and have multiple modules and provide visits and support tended to have agents who are more successful. And of course, the best way to recruit women is to show other women who've been successful. So that's what I would add.
Thank you for that. Well, thank you very much. With that, we've come to the close of the question and answer session. It's time to wrap up, and perhaps I'll just take a couple of minutes to make an attempt to summarize the wealth of experiences that you shared. Perhaps I'd like to highlight, just to recap, a few of the key things that I've heard in terms of how to address barriers. I think what stood out to me about Sashi's contribution is that there's an acknowledgement that in the Indian context, women agents, their actual shop, their actual service point may be delegated at some points of time with other family members, so that they help run the agent shop while women, you know, have other activities to do. Anna highlighted the importance of technology to lower the onboarding cost, the importance of technology to make it easier for agents to do the transactions and serve customers in a faster manner, to deal with time constraints. Ajwa mentioned the importance of lowering the requirements of onboarding women agents from a regulatory standpoint. And Pallavi also mentioned the importance of finding that trusted woman already in the community to onboard them as agents. In terms of solutions, we, very, very creative solutions, focused on diversifying the streams of revenue for agents, and that could include diversifying the financial services they offer, as well as enabling agents to be non-dedicated and allow them to do other types of businesses that complement their income. Mentions the leveraging on existing social networks, right, or community or grassroots networks. For example, Sashi mentioned the existence of the self-help group that exists in India, which is literally hundreds of millions of people that are organized already, similar with the microfinance platform. And the importance of Anna mentioned or highlighted in a nutshell, the importance of continue to add a service offering of value for a customer, right? And in her case, it was the diversification of different types of loan services that are more adapted to more customers. And Ajwa mentioned the importance of technology shift. One of the things that she mentioned, shifting from certain technology bases, for example, POS devices, to more efficient, less costly kind of technology, for example, app-based devices, some of the things that come to mind. But I would like to conclude with a call for action that there's certainly a lot of barriers that we still need to grapple with to reach more scale. And that implies some sort of collaboration with public and private sector. Support on training came out, the importance of regulation to enable more diverse type of service providers, agents to participate in financial markets. The importance of policies that encourage and incentivize providers to move and onboard more women agents, and especially in rural areas where there's a big coverage gap of agent networks, and the importance of convening different types of players in platforms to be able to let them collaborate. And what I take is a lot of opportunities to bundle services and reinforce the value of the services of different providers if they are distributed through a common agent network platform. So with that, I'd like to thank you everybody for their time. I hope this was of interest to all of you. I know there are many questions that we didn't get to for time constraints, but I'm sure you can feel free to reach out to the Women World Banking team to share some of that with the panelists via email. Thank you very much for your participation, and enjoy the rest of your day. And I'd like to especially thank our panelists for making the time to share their valuable experience with us. Bye-bye, everyone.
Thank you very much.